Welcome to Investor Copilot. I'm Viraj, and today we will discuss the trading of bonds. So let's get started. Now, the screen that you see is live data from Questrade. It's actual data on the list of bonds that are available to be traded on Questrade, and you can get such information, this list, on any brokerage. It is not a rule that all brokerages have all the bonds across the board to sell or purchase, but you will definitely see a list of bonds to trade on every brokerage site. I'm using Questrade. Okay, so as you see up top here, there are two tabs here. One is GICs and other is bonds. So we are focused on bonds today, but this also shows that you can sell or purchase GICs on Questrade, which we will discuss later. So we are on bonds today. Um, we see a message here, buying is closed, which means I've taken the screenshot after hours when the buying of bonds is closed. So the buying hours are clearly indicated Monday to Friday, 9:30 a.m. to 3:15 p.m. Eastern Time, and this is the time that you make your transactions. Now, a fundamental difference between stocks and ETFs and bonds when it comes to trading them is that for fixed income instruments, which is GICs or bonds, you need to go through a trading desk provided by your brokerage. So every brokerage or every investment bank, anyone who sells bonds will have a trading desk dedicated for your service, and they will service your requests for transactions on fixed income instruments. So bonds also work the same way. You cannot log on to a bond market and make a purchase or sale directly. You need to go through a trading desk. Now, the way to purchase bonds is basically there are two ways. You will be provided a phone number from your brokerage. You can call that number. It is a direct line to the trading desk, and you can talk to the desk and provide all the information that they ask for, which we will discuss right now. And they can make the purchase or sale for you. They can place a sale order or a purchase order, and you can receive the bond when the order is successful in your trading account. The other way is to do a step one and step two. Step one is to issue a buy order right on your Questrade platform or your brokerage platform electronically. And the step two is that trading desk will execute that order by calling you. So you will get a phone call from them and they will complete the transaction for you. These are the two ways that you can purchase or say sell bonds. So let's look at these filters here. We have very good filters here for our perusal. So we see that municipal bonds, corporate strips, corporate bonds, and then you have high yield bonds and provincial bonds are the filters available directly. Now these, as you can see, are filtered based on the issuer entity, like the category of the issuer. Only high yield bonds has a mix of issuers, and this focuses on high yield, so it's focused on the yield here, and that's the filter, and rest of them are basically based on what type of issuer it is. So provincial and municipal governments, as well as corporations that are corporate entities, are generally the issuers of bonds. Federal bonds are not here. They are not really sold on the bond market the same way that we are discussing. But these are all the issuers here. I have clicked also, I have a mix of everything. And there are some granular filters here, which you can use to even drill down for a particular issuer, or even other kind of filters are available, which we'll look at later. So QSIP, let's look at these headers. We have QSIP here, which is a unique identifier for the bond. We have the issuer, which is, for example, here it is Bank of Nova Scotia. Inventory. What is inventory here? It means that Questrade is authorized to sell this much amount of bonds, which is $1 million here, for today's day. That is what the inventory. So the inventory available with the brokerage to sell today is this much. That is what it means. Coupon. Coupon price, well, it is the minimum declared price by the issuer, which is a guaranteed income for you. So that is the coupon rate which is declared as the minimum, like this is the minimum promise that they are making on the bond. That's what it means. maturity. What does maturity mean? So let's assume that you purchase any bond here and you have a every bond will have a maturity date. Now, what simply the maturity date means is that if you just decide for any reason to hold the bond and not sell at all, you keep it with it and you're getting your yield periodically. It is either annually or semi-annually. So you're getting your yield and you just keep invested in the bond. You are not doing anything to that money. On the maturity date, you will get your principal back as well. That is what it means. That is what maturity means. But that does not mean you don't have the option of selling the bond early. You can do that as well. Bond pricing in Canadian dollars. So this is the price of 1 unit of that bond, and this multiplied by basically number of units will be your total purchase amount. That is what it means. Bond prices do not stay stable; they fluctuate as the interest rates fluctuate. So decisions that central bank makes and other economic factors will affect the pricing, and bond pricing will move around as well. Bond yield is basically the actual return that you end up getting on this bond, and this is historical data. So this is historical yield on the bond, which may be a yearly figure, and it's different from coupon rate because the way the bond performs is that its pricing and its the capability to produce yield will actually result in an actual yield, and there are complex calculations based on how the yield works. So the promised rate, which is the coupon rate, and the yield rate are different because there are complex calculations and market factors that go into determining what this yield will be. And then lastly, we have credit rating, DBRS rating. This is also very important to look at when you make your decision to purchase. It goes from A, double A, triple A. We have some indicator lows, highs, triple B high. So you have a variety of DBRS ratings, and obviously it matters. It's better to buy a secure bond as well. So make a good call based on this ratings as well, and they are very good indicators of how secure the bond is, how safe it is, and how your investment will return an ROI for you. So that's all about trading bonds. Hope this was informational, and we will bring more information on GICs and some fixed income instruments, as well as some more pedigree information on stocks as well later on. Thank you very much.